It's very easy to over-rely on technical analysis when trying to work out what's going to happen next in the Bitcoin market. And while we do the same thing, we do our best to pick up broader fundamental trends, including institutional adoption, mining hash rates, and cross-market relationships. So today, we're going to take a step further in that direction and examine a potential link between Bitcoin and the green tech sector. Now, famously, Elon Musk sparked a major sell-off in Bitcoin last year when, at the peak of EV fever, he first declared that Tesla would accept Bitcoin as payment and then swiftly rescinded the policy on environmental concerns. Bitcoin mining, after all, is a huge consumer of electricity, which is currently skewed to fossil fuels. Tesla CEO and now Twitter owner Elon Musk and former Twitter CEO Jack Dorsey shared an exchange at the time on the platform, agreeing that green tech should play a role in Bitcoin's future. And recently, the pair have teamed up to launch a solar-powered Bitcoin mining project. But let's go a step further. Former Stratfor analyst Peter Zahan recently posted an article which notes that if green tech is to take over from fossil fuels, it is going to require a much more expansive mining operation than exists with oil. And we can see that the wheels are starting to turn in the commodities market, if only slowly. One of the first reactions to war sanctions made by Russian President Vladimir Putin was to announce that Russian commodities could now be purchased in local currency, gold, and Bitcoin by friendly nations, and everyone else would have to pay in rubles. And yes, we know that Russia is mainly selling fossil fuels, but they also produce a lot of commodities that are key for green tech. Russia is the second largest producer of cobalt, a key element in making rechargeable batteries. Russia accounts for 10% of the world's supply of nickel, which is used to make vehicle batteries. It also produces manganese and copper, too. We recently also noted that the Central African Republic just made Bitcoin legal tender too, and for an impoverished, landlocked nation that is a large commodity exporter, we have to assume that this is primarily for trade purposes. In terms of key materials needed for green tech, the Central African Republic's mineral resource endowment includes copper, graphite, and manganese. At some level, it does look like the Ukrainian war represents the start of a challenge by the BRICS to the West, and establishing Bitcoin as a working alternative to the dollar for buying and selling commodities certainly fits that description. It is early days still, and this theory is still more a hunch than a trend, but we're keeping our eyes peeled for more nations that produce materials linked to the green tech sector opening up to Bitcoin for payment. If the theory holds true, we could see institutional demand for Bitcoin grow as the world intensifies its pivot to green tech.